Aditya Birla Sun Life Insurance Savings Plan offer both financial security and growth potential in one package. Will this plan secure your loved one's future while also building your savings? To determine this, we will examine its features, advantages, disadvantages, and returns through the lens of internal rate of return. This video review aims to assess the suitability of ABSLI savings plan for meeting your financial needs. Welcome to holisticinvestment.in. Aditya Birla Sun Life Insurance Savings Plan is a non-linked participating life insurance plan. The main features are flexibility to choose the policy term and the premium paying term, additional sum assured payable in case of accidental death, flexibility to choose the sum assured based on your protection and savings need, guaranteed addition for the first 5 policy years, boost your savings with bonuses starting from the first policy year. Next, we shall look at the benefits of ABSLI savings plan. First, death benefit. In the unfortunate event of the death of the life insured during the policy term, the following death benefit is payable to the nominee. Guaranteed death benefit plus accrued guaranteed addition plus accrued regular bonuses as of date of death plus terminal bonus if any. Here, guaranteed death benefit is a higher of sum assured or 10 times the annualized premium. Next, maturity benefit. In the event of life insured survives to the end of the policy term, the following is payable: sum assured plus accrued guaranteed addition plus accrued regular bonuses plus terminal bonus if any. Guaranteed addition. Guaranteed addition of 40 per 1000 sum assured will be added to your policy at the end of each policy year during the first 5 years. Next, let us discuss the advantages and disadvantages of ABSLI savings plan. First, advantages. You may take a loan against your policy and the maximum loan amount is 85% of surrender value. Simple revisionary bonuses will be added to your policy at the end of each financial year. Next, disadvantages. The sum assured is insufficient to cover the family's basic future needs. The returns are relatively low. Benefits are non-guaranteed as it includes bonuses. Next, the calculation part. The savings cum insurance plan allocates premium to both savings and insurance component. To evaluate the investment aspect, it is crucial to calculate the internal rate of return (IRR), which provides a more insightful analysis than merely considering the cash flows. Let's analyze the benefit illustration from the policy brochure to understand the plan. A 35-year-old male purchases an ABSLI savings plan with a sum assured of Rs 1 lakh. The policy term and the premium paying term are both 20 years with an annual premium of Rs 7,492. At the end of the policy term, he is entitled to receive the maturity benefit including guaranteed additions and bonuses. The illustration below shows two different assumed future investment return rates of 8% per annum and 4% per annum. These rates are not guaranteed and do not represent the maximum or minimum potential returns as the policy value depends on several factors including future investment performance. In the 4% scenario, the maturity value at the end of 20 years is 1.8 lakhs with an IRR of 1.72%. This rate is lower than the interest offered by a savings bank account. In the 8% scenario, the maturity value at the end of 20 years is 2.34 lakhs with an IRR of 4.07% as per the plan's maturity calculator, which is also lower than the returns from a bank fixed deposit. These returns are minimal. Investing in ABSLI savings plan may not help you achieve your financial goals. Additionally, the life insurance coverage provided is insufficient to meet the family's basic needs in the future. Therefore, both insurance and investment aspect of ABSLI savings plan are not favorable for an investor. Next, the comparison part. ABSLI savings plan offer a minimum sum assured of Rs 30,000 and a maximum of 10 lakhs. However, according to IRDAI guidelines, the minimum sum assured for a standard pure term policy, that is Saral Jeevan Bima, is Rs 5 lakhs. Therefore, any sum assured below this threshold would provide inadequate financial support to a family. In the previous illustration, the sum assured is only Rs 1 lakh, which is insufficient for a meaningful life insurance coverage. Pure term policies offer high coverage at a lower cost, allowing you to invest the savings in higher yielding instruments that match your risk appetite. This strategy ensures focused financial protection for your loved ones without the complexities and lower returns associated with the bundled plans. Risk-averse investors can choose debt instrument, while those with a higher risk tolerance can opt for equity instruments. In the the realm of debt instruments, Public Provident Fund (PPF) offers tax benefit similar to traditional insurance policies, including tax deduction for contribution, tax exemption for interest and maturity proceeds. And the current interest rate for a PPF account is 7.1% per annum. For equity investments, equity linked savings schemes (ELSS) fund provide tax deduction for contributions with capital gains tax applicable on maturity proceeds. Despite this, the post-tax returns are expected to exceed the inflation rate with potential returns of around 12% per annum. Here is our final verdict on ABSLI savings plan. The plan encourages regular savings habit but fails to channel these savings effectively for better returns. Investing in ABSLI savings plan is akin to keeping your money in a savings account with the added drawback of a low sum assured. As a result, both the savings and insurance aspect of this plan are unfavorable for investors, offering no significant value addition. Traditional policies like ABSLI savings plan can derail your financial plans, leaving you in a difficult situation. It is important to note that traditional insurance policies typically offer low coverage and comparatively low returns. A more effective approach is to secure your family's future with pure term life insurance policies and invest separately to meet your life goals. This strategy ensures you remain on track even during challenging times. Diversifying your investment across various asset classes is crucial for achieving your dreams. Building a robust investment portfolio is essential in the realm of investments. Any challenges in this area can be addressed by consulting a certified financial planner whose professional expertise can guide you on a seamless financial journey. A detailed review of ABSLI savings plan is available as a blog post on our website. Check the link in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.